Quick question. How much more will you pay for that car just because your credit score is less than 700? Spoiler alert, thousands, and many times 10,000 plus. But what if I told you that you didn't have to overpay for your auto loan? What if I told you that? What if I told you you didn't have to pay for your auto loan and you could position yourself for a large credit win just by understanding what I'm about to share? Shouts out to Consumer Reports for this article and Benjamin Preston for writing this article. And I vetted it, and it's some things that we've been talking about for years that has helped people tremendously when it comes to purchasing their car on better terms without getting robbed from an interest standpoint. Not that they won't make their money in interest, but it's a matter of not being put into the subprime lending category right off the rip, and then understanding how discrimination still happens even today. So, how to get the best car loan rate despite low credit score, and we're going to talk about the best rates and things that you need to consider. Now, if you've ever financed the purchase of anything, whether it was a car, refrigerator, you know that a credit score is key. Now, lower credit scores mean higher payments, because what they're looking at is, if you have low credit, they're looking at you as risky. They're looking at you as being somebody who is probably not likely to pay or probably to default. So they want to charge you higher interest so they can make the most money on the front end, just in case you don't thoroughly carry out the loan. So a good credit score usually means you can get a lower interest rate on your loan, while a poor credit score, obviously, or having no credit because you never financed anything, can push you into the subprime category. Subprime just means below what they consider to be prime, simply put. So they believe under a certain threshold of, let's say it's 700. If you're under 700, then boom, you're subprime. Prime is 700 or above in many cases in their eyes. So to lenders, a low credit score means you are higher risk, pretty much what I said, or according to statistical calculations, you're less likely to pay back the loan, pretty much what I said. Now, this is what I want to point out, because a lot of people don't realize this, but your credit rating may not be the only factor driving up your rate on your loan. If you finance through a car dealer using a lending option that it brokers rather than your own bank or credit union, the rate is often higher because the dealership adds in a fee for serving as the middleman. Look, this is important. So many people I know have gone to the dealerships to apply because they felt like that was the way. Okay, let me go to the dealership. They're the ones with the car. Let me go directly through them and see what I can qualify for. That couldn't be further from the best way to go about doing it, because even though they have the vehicle, they're not the only one who can give you access to capital. And in many cases, when you go to the dealership, they run your credit 10 plus times. How do I know? I've seen this from credit clients who went and purchased the vehicle, and then when I look and see the date that they purchased their vehicle, their credit was ran 12 times, 15 times, 9 times, one time too many, just because they want to apply for a car. And a lot of times they say, well, it doesn't matter as much because, it's the same day. It still looks ugly on your credit report, and it looks like you're trying to apply or get access to, money over and over and over again because of the quantity of inquiries that took place. Because there's certain people who apply for a credit card, multiple credit cards in a day, and they can tell off of that as well. Now, don't get me wrong, over time, at least all of them will fall away at the same time. And that doesn't mean you have to hold on to those inquiries. But if you can avoid those inquiries altogether, then that would be a better opportunity. So I really want you to understand the importance of going directly through a bank or a credit union. Credit unions typically are even better because they don't play that when it comes to them financing or funding an auto loan. They want to make sure that it's worth the value that they're loaning. So that way the person is more likely to pay because they have a car that's worth the price that they're paying from a loan standpoint. Banks, are similar in the sense that you can apply directly through the bank or get pre-qualified directly through the bank, and now they approve you for a certain amount of money, but it was one inquiry. One inquiry, not going to a dealership and getting tons. And that's not even to mention when it comes to buying a home that sometimes there are racial disparities in the auto loan market. Basically, they found that car loan rates for Black and Hispanic consumers can be higher because of bias or weak government oversight. That's one of those things that is unfortunate. And I feel like that table is going to turn, and it's going to be their lost by having that mentality. So regardless of your credit, this is what you got to understand. There are ways to keep your rate on your loan as low as possible. And that's what we teach. If you need access to a way to take your credit to the next level, or if you even want to understand the credit game and make money in the credit game, then you can check out the link below. But if you really just want to understand how to better it for yourself, that's available as well, all from the information down below. But this is what I was saying. Check with the bank before the dealer. Perhaps the best way to get a lower rate is to see what your bank or credit union is offering before you approach a car dealer for a loan. And the thing about when you go through a bank and you get approved for a certain amount, they pretty much will give you a cashier's check, and now you go to the dealership knowing how much you have available to spend. You don't have to spend the whole thing. You can, choose what fits your criteria. But now it's almost like you go there with cash, and you have a little bit more negotiating power because you know what you actually have access to. Very important. So once you understand the power in that, now you'll say, oh, I'm not applying at the dealership because that's a middleman fee I don't have to pay and inquiries I don't have to endure, when I can just go directly through the bank or the credit union. That's very important. And before you go to the dealership, shop around and compare interest rates for yourself so you know what's available based on your credit and income, because those two things go hand in hand. Yes, credit is a factor, but a lot of times people talk about credit, but not knowing that you can have the best credit in the world. If you don't have income to justify your ability to pay back things in a timely manner, then the credit is not as powerful as many people claim it to be. You have to have income to go along with the credit, because the credit that you use to borrow the money that you plan to utilize has to be paid back. And how are you going to pay it back without income? And this is the same thing when it comes to people, using funding and getting access to all of this capital. Okay, you got access to this capital based on hidden data points, but do you have the ability to pay it back? The same is true when it comes to purchasing your vehicle. So you just got to keep this in mind. So how do you get the best rates? Have better credit. So position yourself to get your credit up. If you're not going to buy a car today, then you still have time that you can be doing things to better your score. They just use your credit as a predictor of your ability to make on-time payments. So here are some of the credit score categories, just so you can know what they consider to be, in the higher of credit rating. So exceptional is anything 800 plus, 800 to 850. Very good is 740 plus to 799. Good, 670 to 739. Fair, 580 to 669. Poor, 300 to 579. So this is a person who has little to no credit. And believe it or not, it's things that you can do that can significantly increase your score, even if you're in the 3, 4, 500s. Just off of understanding, having good positive activity reporting to your profile, getting certain balances down, and that's all taught in the link down below as well. So how do you go about saving money on your car loan? Know your credit score. It's important to know what you're working with before you go in there. Of course, you can use all the different types of tools to pull your reports and things of that nature. So that's not hard to come by. You can get access to one in my area, my community. Basically, you can pull your reports for $1, see what's going on with your report, so you can understand what's going on and know what to do with it. If you have time before you're about to purchase a car, like I said, if you're not about to buy a car today, then you still have time. Then use that time to improve your score. That way you can position yourself even better. Another thing you can do, bring a bigger down payment. Now, this is significant because when you bring a bigger down payment, what happens is the amount that you put down subtracts off the amount that you need to borrow in order to qualify for the loan. So if you were getting a car for $30,000, but you were able to put $5,000 down, well, you're not borrowing $30,000. Now you're borrowing $25,000. That lowers the amount of interest that you end up paying. Plus, it lowers the monthly payment that you would have paid had it been a $30,000 loan. So that's a strategy that you can use. Also, getting pre-qualified, like I mentioned, get your credit up first, but then get pre-qualified. And sometimes your banks will let you know, hey, you look like you qualify to, purchase a car through us if you do it within this time frame, because they're basing it on a soft pull on your report. But when you get pre-qualified, what happens is now you know exactly what you're likely to qualify for. Say they see that you can qualify for 50,000. Now you can go and say, okay, I might not take the whole 50. Let me get something that's 30. And now you know, without a shadow of a doubt, what you qualify for without having to wonder or, sit on eggshells wondering if you're going to get qualified or be able to get the car that's on the lot. No, because you were already pre-qualified. qualified. There's some other things you can do, like see what the dealer or the manufacturer is offering for less than ideal credit practice, people who may have less than ideal credit. And this is a strong one. Consider buying a used vehicle. A lot of times people want a brand new same year vehicle. I get it. However, if you get a vehicle that may be just the previous year, you can save a ton in comparison to those who bought a car, that same car, in that year. Sometimes $10,000 more you could save, basically. So say a vehicle, when it was introduced, it might have been $56,000. If you wait a year, yeah, they may have done certain things and got some miles on the car, might have got rented out or whatever the case may be. But if you wait a year, instead of paying $56,000 for that vehicle, that same vehicle might be 38, might be 42, might be 35. It just depends. And now you got the same vehicle. You just got it a little later, but at a better rate. And this positions you to save more of your money. And I told you about the discrimination acts, that, different things that take place from discriminating. But that's not what this video is about. I just want you to understand that when it comes to your car, it's strategies that you can utilize in order to get the best rates, even if you have low credit. By all means, aim to get your credit up. There's strategies and things that you can do to see significant increase over the next 30 days, sometimes even sooner than that. But whatever you do, make sure you track what you're doing so you can see the progress that you're making. And then when you go into these banks or these credit unions and you go to get pre-qualified, now you position yourself to have some level of posture when you go to the dealership and you get that auto loan on your terms, doing it your way.